Hey there. Do you have any big expenses coming up, like home renovations, college tuition, or maybe even debt consolidation? Well, if you're a homeowner, a home equity line of credit might be the perfect way to cover those costs. Let's break it down and I'll show you how it works. So, what exactly is a home equity loan? Simply put, it's a loan that lets you borrow against the equity you've been building up in your house. Equity is the difference between your home's current value and the market value that you still own on your mortgage. The more equity you have, the more you can potentially borrow. So, what are the benefits of a home equity loan? First off, it can give you a lump sum of cash all at once. And there's multiple ways to get this. You can get it as a normal HELOC or a HE loan. The HE loan makes you take out that full amount all at once when you close, where the home equity line of credit or the HELOC allows you to draw whatever you need. So, say for example, you get approved for $100,000 HELOC, but you only need 50,000 of that. Well, you can pull out just 50,000 of that, and then you're only going to be making payments on that 50,000. So it's super beneficial in that realm. You may need those expenses to pay off debt. You may want to remodel your house, maybe redo your kitchen. This is a great way to take advantage of the equity in your home in order to get those things done without refinancing your whole entire house, because you probably have well, especially if you have a really low interest rate, you don't want to refinance out of that necessarily. So a HELOC can be a great option, and it is interest only payments for that first, depending on the program, but anywhere from 5 to 10 years, and then it rolls into a fully amortized loan, so you'll be paying that full amount. But it's a great thing, but there is a catch. It is collateral against your home. So if you're not able to make those payments, there you do take a risk of losing your home or potentially causing some issues down the road. But the payments that you're making on that, depending on what you're using that for, can be tax deductible if you're using funds to improve your home, especially. So definitely check with your tax professional on that. Don't take my word for that, but there is potential that could happen. So if you have any need for this, if you have any need for cash, paying off debts, or whatever the case may be, let's look into a HELOC or a HE loan for you. I'd love to chat with you about it and see what we can get you out. Have a wonderful day, and I will see you on the next video. A quick add-on, there is potential for you to do an adjustable rate HELOC or a fixed rate HE loan. Depending on if you think the market's going to fluctuate or you want a specific monthly payment each month, you can choose whatever fits your needs. So I just wanted to add that little tidbit.